Amazon's interesting today, too. Pershing adding it, Ackman's firm, a new stake in April. What do you think about this one?
I mean, it trades at 13 times EBITDA. And the historical average is 17 times, and you win a lot of different ways. They're absolutely we have haves and have-nots in retail. They're absolutely a have, right? And I mean, they grew their sales in North America 8% in retail when many companies are struggling. International grew 5%. AWS, people were complaining about it, only growing 17%. They're the behemoth. 17% is massive.
And it's more than half of the profit.
Sure. Oh, absolutely. And so is advertising, the margins in advertising. So I think there's a lot of ways to win. The stock has done pretty well, but I still like it. And on any dips, I've been adding.
Well, what about, since you went retail, so Target was a disaster this week.
I was on the show earlier this week.
I wasn't here.
I know, but I got beaten up, silly.
I'm
Don't worry.
you and myself at the same time.
I know.
Well, what are you going to do with it?
No, I'm just going to hold it. I mean, it's down 40% in the past year, so I was not happy. I actually came on and said it was a really hard stock to defend at this point. It was the first quarter in a year and a half where they had negative traffic. I always made the case that at least they had traffic growth.
Okay, so the game's changed. Why isn't your game changed?
Because I think the stock is down so much, and I think the numbers, even at the low end of the range that they're giving, by the way, they gave a range as opposed to Decker's, not today, not giving a range, so at least they gave a range, $7. You're talking about 12 times earnings with a 5% dividend yield. Yeah, it's not going to go anywhere near term, but I just have a hard time selling it because I do still think that there's value to the brand at the company. I do still think they are doing a decent job in terms of what they can control for the most part, but it's been disappointing. There's no question.
But this is the hardest part of the investing game. Yeah. It's hard to sell emotionally a stock that's down a lot. You want to think that it can recover. There have been times in this trajectory where it's gone down a bunch, you defended it, it's recovered a little bit, but now we're back to, I think, even lower stages than when it was embroiled in the whole controversy of the products, some of the products that it had. Maybe, I mean, how do you get to a point, I guess, how do you go from point A to B? It's down a bunch, you feel terrible about it, so you don't want to sell it because it's down a lot, and you don't want to take the L, but at some point you may come to the realization that you have to take the L, but mentally it's hard to take the L.
It's hard to take the L, but that's not the reason why I'm not taking the L. I mean, I think that they do still have a good brand. I still think that the mix has to shift more towards like a Walmart where it's 50% consumables, 50% discretionary. Right now they're 62% discretionary, and that's come down over the years. And I think the discretionary stuff, they've actually done pretty well. It's just not a discretionary kind of an environment in this economy at this moment in time. It's all about services and consumables. And they're on the other side of that. So I do like the restructuring that they announced, and we'll see. I'm surprised by this CEO and this management team that they haven't been consistent. But I'm not taking the L because of emotion. I'm not taking the L. I'm not taking the L because I still believe in the brand and I still believe in the enterprise value over the long term.
Gap's going to report next week. How do you feel about that going in?
Well, that stock's up 22%. So actually, I've won on that name so far. And I was just asking our analysts this week, should we take some profits in it? But I don't think so. It's still trading at 12 times earnings. It yields about 2.5%. This is a turnaround story. Once again, Scott, as you know, I like turnaround stories. But this CEO has delivered. They're gaining market share in 3 out of their 4 brands. They have new management team in 3 out of their 4 brands. They have Zach Posen as their creative director. I mean, so I think that this stock can still continue to grow. And this is without Athleta. And I do think that Athleta is going to actually improve in the second half of this year. So a little nervous just given that it's had a run in a very difficult discretionary tape, but I like the story long term.
Okay.